Hello guys and welcome to another episode of Finfluenced, where we talk about how we got influenced by the Finfluencers, and this time the Finfluencer is AI. And as always, with every week's operations, we're going to pick a stock today and pass it through Gemini Deep Research and see what they say, or what it says, and discuss together an infographic that we will prepare together from the Deep Research. And I will publish it and I will share the link with you in the description below. Let's start with today's activity. And as you see here, I have created a research report and a deep dive infographic. So let's get started. So Advait Energy Transitions Limited. Now, weirdly, why I got interested in this stock was Vijay Kedia is an investor who has a track record of picking up great mid-cap, small-cap stocks before they do a massive run-up. Yeah, you can go ahead and see what bulk deals that he has done. And for example, your Newland Labs, which gave a massive run-up, which I started buying at 11,000 rupees a stock, and I sold it at 14,000 rupees a stock. He bought it at 490, right? Crazy returns, right? Yeah, Newland Labs, he still holds a significant amount. He has taken his profits. He now still holds at least 1% of the company, right? It's crazy, right? So he has recently picked up Advait Energy Transitions. It came into the news. And also another famous investor called Kacholia holds this stock. So I got interested in this because of that, because when I go and log into the screener, which we will look at very soon, it does not really look very good. I cannot just make sense out of it. So I thought that, okay, why not I ask Gemini to do a deep research on it and see what's its take on Advait, and can it figure out why Vijay Kedia has bought this, right? So let's start. Advait Energy Transitions is aggressively pivoting from its traditional power transmission routes to become a key player in India's high-growth renewable energy sector. This infographic unpacks the explosive growth story, strategic direction, and critical underlying financial risks. So even it has understood that there are some financial risks, and we'll talk about this. So while its revenue from FY19 to FY25 in the last 5-6 years has grown up 14 times, it also has an unexecuted order book of 800 crores, which is good. And it has targeted revenue in the next 3 years is at 50% CAGR. Its history is its past performance has not seen very good days, and we'll go to it, right? All right. So 2 engines of growth, a strategic pivot. I think this is the trigger. This is the growth trigger that led the investors rush into the stock. And we'll look at the price chart as well. But before I move forward, if you really want regular insights and analysis like this, please hit the like button. Please subscribe to the channel, and we'll meet every week and discuss the stock together, right? So I believe that the transition from traditional power transmission to renewable energy is what is the growth trigger that they are looking forward to. So let's read about it, right? The company operates a dual business model. The Power Transmission Solutions (PTS) division provides stable revenue foundation, while new and renewable energy (NRE) division, encompassing green hydrogen, solar, BSS, battery energy solution systems, is designated engine for future growth. Management plans to systematically increase the NRE share of the business. Okay, so current revenue mix is power transmission is 90% and 10% is renewable. So they want to grow this 5% annually, shifting the focus of the company from traditional power transmission into a renewable energy company, right? The green wave. So it is targeting 500 gigawatts of renewable energy capacity by 2030 and 5 million metric tons of green hydrogen production by 2030. MMT is million metric tons. That is the unit to measure hydrogen production, right? And how policy translates. Okay, so there's also a lot of government support in it, right? So there's a national green hydrogen mission. You may have heard Nitin Gadkari talk about this. He's very, very bullish on hydrogen as a renewable power source. And there are a lot of PLI schemes getting released by the government incentivizing renewable energy, especially on the hydrogen side, right? So this gives Advait a direct benefit, that is, it wins 300 megawatt capacity allocation through that PLI scheme and through the policy, which is probably another big growth trigger. But now we come to the past performance, right? So as we see here, while the sales and the net profit have grown significantly in the last 2-3 financial years, the ROE has seen a decline for a strange reason in the recent financial year, right? So while it still grew constantly and sales and net profit has also grown, ROCE has decreased. So what does it say? ROC trended upward significantly until FY24, indicating high efficient profit generation from the capital. The dip in FY25, despite rising profits, hints at large capital base being deployed for future projects that are yet to contribute fully to earnings, which means they have done a lot of capex and the revenue realization from the capex is pending, which is okay, which is actually good, not bad. But here's something else, right? So forensic analysis, a look under the hood. While growth is impressive, a forensic look at the financials reveals several red flags. These anomalies suggest potential issues with quality of earnings, working capital management, and financial reporting transparency that warrant careful consideration, right? Remember, this is a small cap company, right? So profit versus operating cash flow. A significant divergence between the reported net profit and actual cash generated from operations is a classic warning sign. It suggests profits may be on paper but are not being converted into cash, often due to issues like aggressive revenue recognition or poor collections. So while we see this kind of a chart from net profit and cash flow from operations, look at the variance between FY24 FY25. I mean, it can go up and down slightly, as I've seen in different companies and different charts. But this kind of variance is probably, one can justify that probably they are doing some capex, and that is why cash flow is taking a hit. But we'll see more in detail in the next few segments, right? There's a working capital strain, time taken to collect money from customers, that is called the debtor days, more than doubled in FY25. This ties up huge amounts of cash and puts a strain on the liquidity, forcing reliance on external funding to run the business. So while debtor days reduced from FY23 to 24, it has more than doubled from FY24 into FY25, from debtor days of 75 to debtor days of 173 is what we have seen right now. And then there's unexplained balance sheet anomalies, that is other liabilities which it is legally undisclosed, maybe mentioned somewhere in the conference calls, but it's not on the balance sheet. Other liabilities have surged over 3.5 times in a single year without a clear explanation in preliminary reports. This is a major forensic red flag that obscures the true nature of the company's obligations. Qualified audit options. Auditors issued a qualified opinion in FY25 consolidated results due to a material error in a joint venture, undermining the reliability of the financial statements. Technology partner bankruptcy. The key technology partner for the fuel cell joint venture, TECO 2030, filed for bankruptcy, putting the entire high potential vertical and its associated investment at risk. There isn't much trust on the financial statements yet, and their key partners are also facing financial problems, which is another red flag. But coming back to the future, some issue with this infographic, I'll fix this. Key future milestones. So by 2026, they plan 300 megawatts electrolyzer manufacturing capabilities. Between FY26 to 27, they target completion of 500 megawatts of solar EPC projects. The electrolyzer plant capacity to be scaled at 1 gigawatt by 2028. Competitive arenas. Advait operates in a highly competitive space. Its traditional business faces price wars, not just domestically, right? Because domestic competition is already there, but the bigger competition is actually China dumping renewable sources into India, and that's a problem industry-wide and across industries, not just with solar EPC or other renewable energy businesses. While its new energy ventures pit against some of India's largest industrial conglomerates with deep pockets and extensive experience like Reliance Industries, Adani Group, Larsen & Toubro. Now let's see what this is. We can quickly find this out. I will change this certainly. So there's Vari Energies and other smaller players in this transmission sector. While the 90% of the business still is in power transmission, we have players like Polycab, KEI, Power Grid, your Apar Industries. These are big players in this space. Investment snapshot, valuation and financial summary. The stock trades at a significant premium to the industry, and we'll look at the premiums and the price analysis as well. Industry average on a price to earnings basis, indicating a high future growth is already priced in. However, its debt level remains conservative, which is a positive. So while industry average 5-year sales is 15%, Advait is 5-year sales growth at 55% and a P ratio of 53, while industry P is at 35. It's a brilliant chart, amazing chart. Yeah. Debt to equity for Advait is 0.23, while industry average is 0.8, which is also very good. PB ratio is industry 4 and Advait is 8.8. ROE is running at a 15% ROE, while industry is running at a 12% ROE. The bull case is explosive, accelerating revenue and profit growth, strategically positioned in high growth sectors like hydrogen, BESS, and solar. Strong tailwinds from the government policies and a massive order book. Low debt provides financial flexibility for capex. Okay, and the bear case is there are serious financial red flags, that is, qualified audit, unexplained liabilities, etc. Poor quality of earnings with cash flow lagging profits for a couple of financial years. High execution risk in new ventures and key partnership uncertainty. And very expensive valuations that leaves no room for error. Of course, because if you trade at a very high PE, then it's going to be very difficult for you during a market crash, right? You will be the first one to fall. So with that, let's go and check Adwait Energy. Okay, so stock PE is, well, I think Google Gemini got some of the values incorrectly, because recently it has seen a massive rally. The price went from 1600 rupees to 2000 rupees right after the news broke out that Vijay Kedia has taken stake in this company, right? And look at the volume spikes, right? Not just here, but from the low itself, the volumes have been spiking drastically. So they know something that we don't know. It's a 2000 crore company as of now after the run up, and trading at a 71 stock PE. ROE, ROCE are actually good. And if you go in the profit and loss statement, so pretty good. Everything is green, everything is all-time high. EPS is growing, net profit is growing. But you see Ashish Kacholia has been holding Advait since September 2024. So he's been holding this since around 1700 rupees a share. But these massive volumes are crazy, right? And if you look at the PEratio chart, it trades at a median PE of 48. It used to be at a median PE. It used to be at a PE of 55, which is what Gemini recorded. But now suddenly the PE has shot up to 71 in the last few days, right? And if you go and look at the technicals, on the daily, on the mean reversion, it looks extremely overstretched right now. There was a time to buy this, but then looking at the past record, it's really a gamble to buy something like this, right? And after the news broke out, if you see, right, it just did not run up. It opened with a gap, which is also a sign of extreme bullishness in the stock. And if you look at at a weekly time frame, then it hovered around its mean, and then now it's reflecting back into going into the overvaluation zone. Everything seems overvalued, as Gemini rightly points out. A lot of stuff has been factored in. A lot of growth has been factored in the high PE of the company. Yeah, and goes without saying, this is an AI generated overview. This has not been consulted with a financial advisor. I am not a financial advisor. So please do your own research before taking any actions on in your own portfolio. And make sure to make wise decisions in your investment journey by consulting qualified personnel. This was Finfluenced for you, and I will see you next week with another report. Bye.